Hey everybody, welcome to Mortgage Today for Friday, April 26th, 2024, and oh, what a day it was. UMBS opened up 27 basis points. We really needed that. S&P futures were also up 35.75 points after yesterday's somewhat dire implications from quarterly data. Today's monthly numbers are surprisingly in line with forecast. Quarterly numbers were 0.3% higher than forecast, suggesting that today should have been 0.4 or 0.5 at least for a monthly number. As such, the 2.8 versus 2.6 forecast for the annual number is being taken in stride, and markets are focusing on the 0.3 versus 0.3 forecast being better than expected. Not that it's actually better than the forecast, but remember that forecasts come from economist surveys, and it was too late to resurvey on the fly yesterday. Traders certainly no longer expected 0.3. Monthly core PCE came in at 0.3 on a 0.3 forecast, was 0.3 previously, so it didn't go down but it didn't go up. Annual core PCE came in at 2.8 on a 2.6 forecast. It was 2.8 previously. After all the other data we've been getting recently, staying still is actually kind of a win. Personal incomes rose 0.5% month over month in March, while personal consumption rose 0.8%. Those credit cards are getting nasty. Spending rose 0.8%, driven by increases in healthcare and housing. Again, I point to the vivisection here. High consumer spending is usually associated with economic booms. However, when the increased spending is driven by non-discretionary items, it doesn't seem to feel like a boom. Nobody gets a recreational root canal. Yesterday's GDP data included the core PCE price index, which came in at 3.7 versus 3.4 forecast. It suggested that today's actual core PCE price index reported in the income outlays report would also be higher than forecast, since it comes from the exact same underlying data. Surprisingly enough, the monthly change in March was right in line with the 0.3 expectation, 0.317 before rounding. This came down to a few issues, with the most important change being upward revisions to January and February. Bonds are happy because the reality is not quite as scary as it seemed yesterday. Trading levels reflected this, as MBS and Treasuries are still a hair weaker than they were before yesterday's data, but much stronger versus yesterday's close. UMBS closed up 30 basis points at 99.37. So at 99.37, we're in this very wide range with a ceiling at that 99.647 that has been very tough to break. And we got a floor all the way down 98.68. all the way down at 98.867, which we don't want to test. Tomorrow is the weekend, and then after that we have a busy, stressful week. On Tuesday, I get employment costs, which is kind of tipping the hand for different things, and then we get the S&P Global Manufacturing PMI. We get the Treasury refunding announcement, which is how much Treasury debt's going to be issued as supplies. A big one is ADP jobs and JOLTS data, and then the Fed interest rate decision and press conference. Everybody's going to be looking at their comments on that to see when they think we're going to get a cut or if we're going to get a raise. And then Thursday we get jobless claims as usual, and then on Friday we get non-farm payrolls, unemployment rate, and the S&P Global Services PMI. So that's a lot of big ticket movers for 1 week, so definitely get rested up and check out some of our common influences and our sponsor at wellthatmakesense.com. Particularly good series going on right now, a 3-part video series from the tremendous books The War of Art and Turning Pro by Stephen Pressfield. You'll definitely want to check that out. They're short listens, but packed with information.